let's get a sense of where we're at the moment. To do that, we're joined by Pete McGuire from XM. Pete, a very good Monday morning to you. All right, interested to see what you'll be watching this week. There's plenty on the data docket because it was relatively quiet last week and a shortened week, of course, on the market in the US. So locally, what are you going to be watching? We will get the latest read on inflation, which is going to be all important.
Absolutely, Andrew. Yeah, we've got the CPI numbers coming out here, and what that's going to tell us how we're moving forward over the summer period. So that'll be very interesting to see. You've got a whole swathe of data, big barrage of it as far as US numbers, and also out of Eurozone and Switzerland. So I'm keeping an eye on those as well, and how that all moves forward as far as euro versus dollar. And I think equities have had a nice little run up. Will that continue into Santa Claus?
Yes, well, are we already in that Santa Claus rally? I guess that's debatable. I'm still looking at some market commentators saying the bottom's not yet in. So, I mean, there's still that negativity out there, isn't there, Pete?
Absolutely.
Yeah. So, now, not just inflation numbers. Actually, we're going to hear, there's a bit of speak coming from Reserve Bank Governor Philip Lowe this week, appearing before a parliamentary committee today, and then he's also speaking at the end of the week. Are you going to be looking to see what he has to say? Do you think we'll get any further hints?
Well, yes, I'm looking forward to the rhetoric coming from Mr. Lowe. Also, what impact that has naturally to our Aussie dollar at 67.20, and whether they talk it up or whether it's going to be pushed down further. We've got a weakening US dollar, and the impact as far as from a currency trade perspective, whether that movement to the upside continues, Andrew. We've had a really nice rally, and whether that momentum we take out 68 just depends on what Governor Lowe's thoughts are.
All right, in the States, what are we seeing just as far as inflation, and also we've got some really key jobs numbers dropping this week as well?
Absolutely, Friday, non-farm payroll. So there's the first part, and then you've got also just the general theme coming out after we saw what happened last week with Fed Chair Powell and the overall momentum. We've seen a big sell-off that continues softness as far as US dollar, and that's really the identifying factor. So we keep an eye on that one, and whether that continues its downdraft, and what we see as far as those payroll numbers Friday, and the impact as far as to the equity markets and to commodities and currency.
All right. What's your read on, because the other part of that equation, not just jobs but also inflation, of course, as central banks try to tackle that. How is that playing out when you compare what's going on in the US and also in the Eurozone?
Well, I think Andrew, if you're looking at the big numbers, we're a 50-50 toss of the coin now as far as risk of recession for the USA. So that seems to be very much on everyone's mindset. So it's where does it fall? And the dovish sentiment coming from the Fed. So I think that will continue. If we see 50 basis points in December, then that will soften if inflation again edges down. And as far as Eurozone, I wouldn't be surprised to see those guys, they're battling a pretty hard storm there, and it probably will increase as far as that inflation number. The only good sign is you've got cheaper energy prices over the last couple of weeks. We've got WTI at 76, and Brent, I'm just watching that at about $83.60. So that's quite softer, $15 off in the last couple of weeks, Andrew.
Interesting what's going on in Europe at the moment, because of course, we keep hearing how dire the situation is there with those, particularly energy prices so high as the war continues in Ukraine. But we had French consumer confidence, that they actually rose, and then we had that latest read as far as growth in Germany, the largest economy, is concerned, actually higher than anticipated. Signs, do you think, Pete, that although the Eurozone is heading into recession, it may be a little shallower than we expected?
Well, we hope so, Andrew. I mean, that they are good signs, and that's a confidence from a sentiment perspective. So that's a good sign. You've also had that nice uptick as far as euro. We're nearly approaching that 1.04 number. So it's been solidly bid up, and that's an identifying factor as far as that good news coming out of Eurozone. So yes, let's hope that that's the situation moving forward. Cheaper energy prices and not as dire as what we first thought. So it was always a storyline coming back to, August or September. You've got to get to November, December to see what the man and woman is feeling on the street as far as those inflation numbers and the impact to the domestic economies.
You mentioned energy prices. What are you seeing in the oil market at the moment, Pete? Because a lot of this is contingent also on those price caps that that EU members want to put on Russian exports.
Well, I'll answer that one in a second. But the first one, Andrew, is OPEC's monthly decision amid expectations of output increase. So it's normally this time of the year. It's always the last week of November, first week of December. They have that meeting in Vienna. So there's that. We've just got to see how that falls. And then next part is your previous point, where with Russian crude. I'll say this, Andrew. We've seen over the years. Many years as far as trying to put sanctions on, and what Libya did, and of course Venezuela and Iran. Will Russian just put those into other ships, and that's what they're saying, and just be reflagged or changed over in mid-ocean, and then they get to their desired destination. So it's going to be very difficult to capture that Russian crude and keep a price cap on it. That's what the energy experts are telling me all across the Mid-East.
Elsewhere in the commodities complex, precious metals. Gold, silver, obviously having done very well recently. Do you see that momentum continuing or not at this point?
Well, I'd like to think so. 1770, you've got that bid up for gold, Andrew. So it's had a really nice run in the last few weeks. It's a little bit exhausted over the last few days. You've had copper, you've had silver sitting just under $22 an ounce, about $21.75. So I think that will also continue. It's been strong buying, so that's a good sign. And as that US dollar takes more pressure to the downside, that's going to push those precious metals up. As far as base, they've been very, very choppy. Some of those markets have been moving 3 and 4% a session. So, very wild whipsawing. And I notice iron ore, as you mentioned earlier in the show, $93 a metric ton. It's still very flat.
All right, and a lot of this also contingent of what's going on in China at the moment. Pete, how concerned are you? Because we've got rising COVID cases. Plus, unrest is growing across the country.
Yeah, I think that's the point in time. I mean, all the media that I'm seeing and people I'm talking to out of Hong Kong and so on that are pretty, got family members there, they're saying it's really starting to ratchet up. So, hope we don't see another Tiananmen. And there's a lot of uncertainty and a lot of, political upheaval across that whole China basin, with the youth saying, well, we've had enough of these lockdowns. So let's see how it plays out. But it's not looking that pretty, and it's going to impact naturally, I think, the Chinese economy. They've got their own concerns, as we know, with the property sector and as far as, residential sales and so on, Andrew.